fiscal stimulus. But in France, Prime Minister Sébastien Lourdes resigned earlier this morning, less than a month after his appointment. In fact, his cabinet lineup was only announced 14 hours prior to the government's collapse. That sent France's main benchmark CAC 40 lower as concerns over this dysfunction in the Eurozone's second largest economy grew. Lecornu is a close ally of President Macron, but his new cabinet lineup had angered opponents and allies alike, which led to this swift and unexpected resignation. French banking stocks led the declines on the markets, while French bond yields rose and the euro fell against the dollar. And the last thing you need to know is that gold hit yet another record high, the price now really zeroing in on the $4,000 an ounce mark. This surge is down to expectations that the Federal Reserve will cut interest rates further this year, and the fact that the US government shutdown continues to drag on. The precious metal is now up almost 50% year to date. And remember, I told you all about the debasement trade on Friday. That's when investors shun major currencies and instead buy both gold and Bitcoin together. Well, Bitcoin over the weekend, it climbed over $125,000. Well, to help us unpack all of these stories and more, I'm joined by Janet Moy, Head of Market Analysis at RBC Brewin Dolphin. Janet, thanks so much for joining us. Let's start with this shutdown. It doesn't seem to be putting off investors when it comes to buying US stocks. Why do you think that is?
Hi, good morning, Ransan. Thanks for having me. I think the reason is because investors are overall thinking that this is likely to be temporary and is likely to have minimal economic impact. In fact, if you look at past shutdown, it really has limited economic impact and market impact on average. So I guess the market is just, having seen this movie many times, they're not reacting too much. And also, I think the key driver for US equity markets remains firmly on artificial intelligence. And particularly, we've seen so many mega deals in the AI ecosystem. So that is seriously the main driving force of the US market, and it is basically intact for now.
But don't you think without for instance, we didn't get jobs numbers on Friday, without that data, are investors sort of a bit blind in terms of what they can predict?
A little bit, but not all, because we still have private sector surveys and data that is available, which ultimately is pointing to softening in the US labor market, but overall not falling off a cliff. I think that's a very important message. As long as the US labor market is just softening and still overall regarded as manageable and resilient, I think the market still has reason to grind higher. Particularly, softening labor market further reinforces the case of further Fed rate cuts.
And Janet, let's turn to France now. And it was a bit of a surprise this morning to see the new French Prime Minister and his government resign. How worrying is this? I mean, France's political upheavals, they're nothing new really, right?
I do think it is starting to get more worrying, because you're right that it is nothing new, but we have seen a couple of changes in the Prime Minister already, and there seems to be this political gridlock that is impossible to break. And I think markets are worried that even if President Macron appoints another Prime Minister, it's going to be the same. So there's no breakthrough in how to pass a new budget, which ultimately just means political gridlock, fall in economic confidence, fall in business confidence, and really hurt the whole market sentiment. And ultimately, I think markets really worried that eventually a new election has to be called to break this gridlock.
But it was a bit of a different story in Japan. We expect a new Prime Minister to be appointed later this month, and she's expected to introduce more fiscal spending and pressure the Bank of Japan to keep rates low. Is now the right time to be looking at Japanese equities even more closely?
Yeah, it's a very different sentiment there in Japan, but overall I think the drivers are a bit different. So we saw a big depreciation in the Japanese yen, which tend to boost Japanese exporters, and markets are expecting potentially more fiscal stimulus because the new leader is pro-stimulus, and she also wants to call for lower interest rates. So overall, this is stimulative for the economy, which ultimately is good for the markets. But I think that the concern is that at the end of the day, there would be more government borrowing potentially, which again comes back to the concern on fiscal sustainability, a wider fiscal deficit. But the beauty in Japan is that at least only a small part of the Japanese government bond market is owned by foreigners. So it is, arguably less of a concern compared to France, which, about 50% of the bond market is owned by foreigners.
And Janet, on Friday on our show, I spoke about the debasement trade where investors shun major currencies in favour of buying gold and silver together with Bitcoin. Do you expect to see this kind of trade continuing?
I think so. I think what we have seen, with regards to the shutdown in the US government, with regards to what's happening in France and Japan, ultimately is a collective theme, which is that it is very hard to cut spending, and it's very hard to increase taxes, and after all, government will have to borrow more. So it is ultimately a fiscal sustainability issue, which ultimately could lead to central bank just printing more money, and that leads to monetary debasement and inflationary consequences over the longer term. And in such an environment, as we see many more of that evidence happening globally, I think buying gold and real assets will still be a trade that will continue.
Janet Moy from RBC Brewing Dolphin, many thanks for your thoughts. Okay, we've got some breaking news now, and it's Merger Monday on Wall Street. The deal is in the banking sector, first of all. Fifth Third Bancorp is acquiring Comerica in an all-stock deal valued at $10.9 billion. This tie-up between the two regional banks will now create one of the country's largest banks by assets. It will be the 9th largest bank with $288 billion in assets. Shares of Comerica are surging on the news while Fifth Third is under pressure. Coming up on Morning Brief Market Sunrise, Tesla shares are rising ahead of the opening bell on Wall Street, the company teasing an event on X. We have the details on what you can expect. Plus, President Trump is gearing up to announce billions of dollars in payouts to American farmers. You'll hear how one farmer feels about it next.
Are consumers still spending, or is a pullback underway? Friday's Consumer Sentiment Report, a key indicator of confidence in the economy, inflation, and spending, will help shed light on the current state of the consumer. Tune in to Yahoo Finance for a full coverage and analysis.
We've all been there. A dead battery, a flat tire, and no help in sight. But what if you had the ultimate emergency tool at your fingertips? Introducing the Flash Charge 4-in-1 Jump Starter Power Bank Plus Tire Inflator, your roadside lifesaver. With wireless inflation, emergency ignition, LED lighting, and a mobile power supply. The Flash Charge is compact, powerful, and reliable, designed to handle the unexpected. Order now. Stranded again.
Titanium. Stronger than steel. Lighter than aluminum. Trusted in aerospace, medicine, advanced engineering, and now redefining the way we prepare food at home. The Titanium Edge is prized for its strength, purity, and resilience. Resists corrosion, never absorbs odors, and remains flawlessly food safe without ever breaking down into harmful microplastics. A breakthrough 3-piece cutting board set, double-sided, ultra-lightweight, and built to last. With a sleek, metallic finish, it transforms your kitchen. Titanium Edge, now available through this exclusive television offer. A code to order now.
Whoa, 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 whoa! You've been eating corn wrong your whole life. Introducing the Cobb Gobbler. Just line it up and pull. That's it. No mess, no strings in your teeth. It is weirdly satisfying. Once you grab one of these, let's be honest, you're never going back. Scan the code on your screen now.
Say hello to the Cobb Gobbler, the effortless corn stripper. That's cream of the crop with its ergonomic design. Peeling corn has never been easier. Crafted from solid, rust-proof stainless steel, Gobbler is built to last.
Well, it's time now for today's trending tickers and breaking news. Shares of AMD, well, they're skyrocketing this morning thanks to OpenAI. The two companies reaching a deal that could have OpenAI taking a stake of 10% in the chip maker. They are also announcing a massive computing partnership. It's a collaboration on AI data centers, with OpenAI committing to purchasing 6 gigawatts of AMD's MI450 chips. The deal is AMD's biggest challenge to NVIDIA's dominance in the AI space. NVIDIA shares are under pressure on news of this deal. Tesla shares, well, they're set to open higher. The electric vehicle maker is teased an event for Tuesday with a pair of posts on X, which suggests there could be some kind of product launch. Investors and analysts have been waiting for the debut of Tesla's lower-cost version of the Model Y to help maintain sales momentum. And it's been years since Tesla debuted a new vehicle. In June, the company said it would start selling the car in the fourth quarter, but would ramp up output slower than planned. Now, Tesla is getting a boost for third quarter deliveries as the US electric vehicle tax credit expired at the end of September. But most analysts believe that without the tax credit, sales will slow down. And check out shares of Critical Metals Corporation. The stock is soaring on a report that the Trump administration is considering taking a stake in the rare earth mineral company. Reuters saying the stake would be roughly 8%. Critical Metals purchased a deposit in Greenland last year for $5 million cash and more than $200 million in stock. The government has recently announced investments in other rare earth firms, including Lithium Americas and MP Materials. But as you saw there, shares there up almost 76%. Okay, now President Trump is expected to announce a bailout of American soybean farmers this week to the tune of roughly $10 billion. While that may be short-term help for struggling farmers, one farmer told Yahoo Finance it wouldn't address the root of the problem: tariffs. Soybean farmer Blake Hurst spoke with Josh Lipton on Market Domination. Here's some of that conversation.
The fourth quarter is upon us, and October has a volatile reputation in the markets, which it has earned. It's where the pressure tends to build and where it often releases in many years, letting the market sail into a year-end soft-bedded Santa Claus rally if history repeats itself. Today in Stocks and Translation, we are breaking down the volatile seasonal tendencies of this storied form.
I want to start on kind of bigger picture, Blake, because I'm curious to hear how the American farm economy is doing right now, Blake. You know, broadly, how is it holding up? What is your sense?
Well, we're overall farm income is down slightly, but that's a tale of two different economies. Livestock, particularly cattle, are doing very well. Crop farmers like our farm are operating at a loss.
Why are you operating at a loss, Blake?
Because our prices 3 years ago for the bushel of corn was $7. Today it's $4. Our costs have remained the same. Same percentage drop for soybeans, or probably a little worse. So we've seen a tremendous drop in our profitability.
And Blake, my understanding is that in particular, it is the soybean farmers like yourself who are having a particularly challenging time. Is that accurate?
Oh, absolutely. Over the past few years, China has purchased 25% of U.S. soybeans. This marketing year, which starts in the fall, on October 1st, they have contracted for zero. So we basically, by a typical year, 10% of our crop would have been marketed to Chinese buyers. This year, we've sold zero. So that's obviously weighing on prices and makes a real concern about how we're going to even have room for this year's soybean crop. It's a good crop in much of the Midwest. We had a very favorable summer, but we're faced with low prices this fall.
So put some math on this for me, Blake. You will sell your bean crop for about what a bushel, you think?
Well, today, right around $10, and that's just barely break even on soybeans. Again, 2 or 3 years ago was $13 or $14 a bushel. So farming is cyclical, and this isn't our first rodeo with a drop in prices, but it has definitely been made worse by the trade war with China.
Let me ask you, Blake, if President Trump can cut some type of deal with Xi and get the Chinese to buy U.S. soybeans, what would that mean for your farm and for the industry?
Oh, it would be a tremendous boon to the industry if we got a deal. Of course, if we hadn't put our tariffs on in the first place, we wouldn't have needed a deal. We would have been operating in the normal market economy, but that's not the route we decided to take, and farmers are paying the price.
Well, here's, Blake, maybe, the Trump administration, I'm guessing might put it something like this. They might say, Blake, what we're trying to do is, it's big, it's historic. We're trying to reform the global trading system, and there's going to be some short-term pain, but longer term, the objective is to put American industry and American farmers on firmer, fairer ground with stronger trade deals. What do you say to that?
Well, we put the first round of tariffs on China in 2018 during the first Trump administration. The Biden administration kept them in place. We've had 7 years to see how this experiment's going to work out, and so far it's a complete bust. There's no other way to put it. We have seen the administration announce a couple of trade deals. The most recent one with Taiwan, and they said, by golly, we're going to sell Taiwan $10 billion of agricultural goods in the next 4 years. The problem is, in the last 4 years, they bought over $12 billion. So the deal that they're trumpeting is no better than the status quo. So far we have not seen those results. So far we have not seen an improvement in our position as exporters.
Let me ask you, Blake, the Journal is reporting here that Trump is considering $10 billion or more even in aid to farmers. What would you make of that possible response?
Well, if he sends me a check, I will spend it. But it seemed rather, it's crazy when you think about it. We put on tariffs, collect money, and then we take that money, which we've collected from American consumers, including farmers who buy imported goods. We take that money and give it to the industry that's been hurt by those very same tariffs. Seems to me that it would make a lot more sense to get rid of the middleman, drop the tariffs, and again, resume normal trade relations.
Coming up on Morning Brief Market Sunrise, the future of the AI trade. OpenAI hosting its third Dev Day, and investors will be watching to see what it means for the company's key partners.
Say hello to the Cobb Gobbler, the effortless corn stripper. That's cream of the crop. With its ergonomic design, peeling corn has never been easier. Crafted from solid, rust-proof stainless steel, the Cobb Gobbler is built to last.
I love the Cobb Gobbler. Totally changed my salad game.
I used my Cobb Gobbler so much I bought 3 more. It shucks great.
Elevate any dish with freshly shucked corn. It's quick, simple to use, and easy to clean.
수치가 빠졌습니다.
Code for an exclusive discount.
Why do all cars have this dumb gap? And why didn't we fix it sooner? Introducing the console catcher. Slides right in over top of your seatbelt. Nothing falls through anymore. And you don't just get one.
CEO David Solomon had said that, there seems to be an AI bubble at this point, but, pointed out that just as Amazon in particular gutted it out during the kind of pop that happened in the internet, after the internet bubble, there will be companies that will gut it out as well with the AI bubble. And so it's just a matter of, how many people do believe that this is a bubble, and if it is in fact a bubble, when does that pop?
Okay, before we go, let's have a check-in on the markets. And as we mentioned, gold hit an all-time high. And Bitcoin, well, it's hovering. Europe now, and European stocks, well, they opened on the back foot in early trade, but as you can see, the FTSE now back in the green in London, but the CAC 40 is down quite heavily, as you would expect, and bigger declines than most in the region. Remember, last week, a number of these European indices hit record highs, so we'll have to see if that can continue. Okay, let's move on to see how Wall Street might open when the US opens later. And US equity futures are on the rise, as you can see there. Investors seemingly more confident that the Fed will continue to cut interest rates, and that seems to be the focus. Okay, well, that is it for Market Sunrise for this morning. Stay with Yahoo Finance for continuing live coverage of the markets and your money all day on streaming and online. Coming up next, join Julie Hyman ahead of the market open on Morning Brief. I'm Ramzan Karamali. Go own the morning.
Hey, Blake Anderson here to show you the Veggie Vortex, the 3-in-1 slicer, shredder, and sanity saver that spins veggies and more into culinary gold. Potatoes? Boom. Chips in seconds. Someone say cheese? Look at that, perfect for pizza. This thing's fire. Ready to really go nuts? The Veggie Vortex chews through nuts like an over-caffeinated squirrel. It's got a suction base so strong it clings tighter than skinny jeans after a big Thanksgiving dinner. Get sucked into healthier cooking with the Veggie Vortex. Scan the code on your screen to order now. Hey, Blake Anderson here to show you the Veggie Vortex, the 3-in-1 slicer, shredder, and sanity saver that spins veggies and more into culinary gold. Scan the code on your screen now and get yours with this special TV offer, because this kitchen marvel is pure magic. Watch this. Potatoes? Boom. Chips in seconds. Hash browns so fast, the Pancake House is going to start calling you for tips.
Order up.
Cucumbers. Perfect slices for salads, sandwiches, or slap them on for a quick spa day. Ready to really go nuts? The Veggie Vortex chews through nuts like an over-caffeinated squirrel. Someone say cheese? Look at that, perfect for pizza in seconds. This thing's fire. It's got a suction base so strong it clings tighter than skinny jeans after a big Thanksgiving dinner. 3 stainless steel drums. Slicer, coarse and fine shredding. BPA-free plastic, dishwasher safe. The Veggie Vortex will turn mealtime into fun time every time. Get sucked into healthier cooking with the Veggie Vortex. Code on your screen to order now.
Titanium, stronger than steel, lighter than aluminum, trusted in aerospace, and now redefining the way we prepare food at home. Resists corrosion, never absorbs odors, and remains flawlessly food safe without ever breaking down into harmful microplastics. Titanium Edge, now available. Exclusive television offer.
Welcome to Yahoo Finance's flagship show, The Morning Brief. I'm Julie Hyman. Let's get to the three things you need to know today. First up, AMD scores a big win in its race to catch up to NVIDIA thanks to OpenAI. The two companies reaching a deal that could have OpenAI taking a 10% stake in AMD. It's part of a massive computing partnership, a collaboration on AI data centers, with OpenAI committing to purchase 6 gigawatts of AMD's Instinct graphics processing units, or GPUs. That'll take place over several years and across multiple generations of hardware. And it's a merger Monday on Wall Street. Fifth Third Bancorp acquiring Comerica in an all-stock deal valued at $10.9 billion. This tie-up between the two regional banks will create the country's 9th largest bank with $288 billion in assets. Shares of Comerica surging on the news, Fifth Third shares under pressure. And the corporate news helping lift the broader markets this morning as the U.S. government shutdown showing no end in sight. But that's not weighing on investors. The Dow and S&P 500 set to open at new all-time highs. And we're also seeing record-breaking moves in both gold and Bitcoin. Over the weekend, Bitcoin topping $125,000 and gold also moving higher into fresh record territory. Let's get a check-in on stock futures here this morning. As we said, pushing toward new records, in particular the NASDAQ getting a lift because of these new tech AI headlines here. The NASDAQ indicating a gain of 0.8% at the open. The S&P 500 pushing toward a gain of about 0.25%. And the Dow futures pointing to a gain of about 0.5% at the open. Let's dig into these top stories of the day now. OpenAI and AMD announcing a multi-billion-dollar partnership, plus earnings season coming close to kicking off. Goldman Sachs expects S&P 500 firms to beat estimates, and Bitcoin and gold climbing as the government shutdown drags on. Joining me now, tech editor Dan Howley, senior reporter Ali Canal live at the NASDAQ, and senior markets reporter Inez Ferre. Dan, you love in the news business when you wake up on a Monday morning and you get a piece of news like this. Just, we were seeing this sort of AI trade run into some roadblocks, some concerns about its sustainability, and then we get a sort of hold my beer moment from OpenAI and AMD this morning.
Yeah, I mean, Jeff Bezos basically saying last week that there was an AI bubble, but that it could be a good thing. And then this morning we see this multi-billion-dollar deal between AMD and OpenAI. And, this is going to help OpenAI obviously build out their data centers with these MI450 GPUs. It also gives AMD a leg up against NVIDIA. Although it's interesting, we're seeing OpenAI invest in AMD while we just saw NVIDIA invest in OpenAI. So it's kind of a cycle that we're starting to see here between these different companies working around. But yeah, I mean, this is a massive move for AMD in particular, especially as they, as I said, try to gain share on NVIDIA and prove that they are not just second fiddle, that they are a player that should be seen as going head-to-head with NVIDIA. Yeah, I mean, for OpenAI, it's just more money kind of going out the door. We have to see when eventually they start to make that money back, though, because they are spending a lot more than they're making.
Yes, most definitely. And that's been one of the concerns in recent weeks, right? The information, for example, the company said that OpenAI had about $4.3 billion of revenue in the first half of this year, but lost $2.5 billion. And that's been the cycle. So, Dan, just to dig into the sort of NVIDIA versus AMD a little bit further here, is the idea, though, that there is just so much demand and so much capacity for computing that OpenAI requires that it needs like an all-hands-on-deck approach?
I think that's exactly it. This isn't necessarily them saying that NVIDIA is not good and that they need, a better chip from someone, being AMD. That's not the case at all. This is basically them, I think, saying, as you said, we need as much capacity as humanly possible to meet the demand that we're seeing. And so they'll do that in any way they can. And that includes, either using NVIDIA's chips or AMD's chips. Anything that they can get their hands on is important at this point. We're still seeing a lot of build out across the board when it comes to AI. It's not just OpenAI, it's the Microsofts, the Amazons, the Googles, that are all going out and building their own data centers. And then, there are individual countries that are doing this as well. There are research institutions that are doing this. And so there's just not enough GPUs to go around. And so any way they can get their hands on it, that's what they're going to do.
That's what they're going to do, and that has been propelling the NASDAQ to new highs, even as we've had some of these warnings, Ali, from the likes of Jeff Bezos and others, even within the industry, who are saying, okay, things are getting a little hot.
Yeah, Dan was just talking about that at that Italian tech conference last week. Jeff Bezos was optimistic, but he did say that this is bubble-like activity. It's ultimately going to be good for society. He described it as an industrial bubble. But then we also heard from Goldman Sachs CEO David Solomon, who was a little less optimistic. He continues to expect growth through 2026, but did warn that some capital won't deliver returns and a market drawdown could be expected in the next 12 to 24 months, and he wouldn't be surprised to see something like that. And we've heard strategists across Wall Street echo these warnings as well. Ed Yardeni from Yardeni Research just boosted his S&P 500 target to 7,000 once again, and he cited a melt-up that we're seeing in stocks due to the AI rally. On top of that, you have Fed easing. And then Julian Emmanuel from Evercore ISI, he also sees a 30% chance of a bubble scenario, possibly pushing the index to 9,000 by 2026, although we did say that a short-term pullback before that is likely here. So you were just talking about the cycle where we have these AI giants essentially funding each other's growth. Dan was laying out the case that OpenAI is losing money at this point. So that's the question mark. When are these companies going to turn a profit? And at what point will that happen before any potential bubble bursts?
Meantime, even as people are buying stocks, we're seeing safe havens go up as well. I think there's a new target from Yardeni on gold, too.
Yeah, gold continues to rally. Yardeni says that $4,000 an ounce by year end is what he's currently expecting. He sees $5,000 in 2026 and even $10,000 before the decade end. And he cited a few tailwinds, a few catalysts here. One being central bank buying, another geopolitical realignment, and finally what he calls a gold put as nations diversify reserves. And gold, you're seeing on your screen, just a steady up climb, up 50% year to date. And we know gold is seen as a safe haven asset. And there's been many times throughout the course of the past year where there has been a flight to safety. There has been volatility. But it is interesting to see gold rise at the same time that the major indexes are rising as well. So there's a lot of structural tailwinds, but also the gold bulls just keep saying that we could continue to see these all-time highs, Julie.
Well, and P.S., gold is also rising the same time as so-called digital goldiness, right? So we're seeing Bitcoin catch some new bids as well, renewed activity.
Yeah, that's right. And Bitcoin seasonally in October does well. And typically gold front runs Bitcoin. But at the same time, we are seeing all-time highs for gold and for Bitcoin. And Wall Street is starting to dub this as a debasement trade. You've had JP Morgan talking about debasement vibes when it comes to the U.S. dollar. You're seeing the U.S. dollar that's been declining. And therefore, you are seeing metals that have been rising. You're seeing crypto that is rising. And part of this is because of these fiscal strains that governments are having, and really around the world, not just the U.S., but you have this mounting debt, and therefore investors are trying to get ahead of this debasement that's happening with currencies. It's not just the U.S. dollar that's having issues, it's also the euro, it's the yen, and so that's why you're seeing this bid when it comes to the metals, when it comes to crypto. And by the way, crypto, Wall Street having price targets on crypto, like TD Cowen is saying, 128 by the end of the year for Bitcoin. You're looking at Citi that has 135 by the end of the year for Bitcoin. And those are some of the more conservative price targets out there, because you certainly have price targets of 150 up to 200,000, according to some Wall Street estimates out there.
Yeah, never hard to find high estimates and forecasts for Bitcoin, to be sure. Guys, thank you so much. Busy morning. Dan, Ali, Ines, appreciate it. And coming up on Morning Brief, we're not done with the busy morning. We're going to bring you today's top trending tickers as we count you down to the opening bell. Today's trending tickers, we are watching three different stocks here. Fifth Third, Comerica, Verizon, and Tesla. First up, Fifth Third, the regional bank agreed to buy Dallas-based Comerica for about $10.9 billion in stock. It is the largest U.S. bank deal announced so far this year and a sign of potential deregulation in the industry under the Trump administration. Fifth Third has long been known for its reach across the Midwest, but it has spent years trying to expand in the Southeast, where the deal with Comerica could help. Comerica has been under pressure to sell to a large bank from an activist investor group. The company's been cutting expenses to try to improve earnings. Next up, Verizon announcing a big change in its C-suite. Verizon has named Dan Schulman as CEO, replacing Hans Vestberg. Schulman, remember, was previously CEO of PayPal. He'll take over the CEO post effective immediately. Yahoo Finance spoke with Schulman last year to discuss his leadership style.
You have to have the confidence to make difficult decisions, knowing some of them will be wrong and some of them will be very right. And that is what moves the company forward.
Vestberg will stay on through October of next year to help ensure a smooth transition in leadership, including the integration with Frontier Communications. The shares down about 1% this morning. They have fallen some 16% under Vestberg's tenure. Finally, we got Tesla. Shares moving higher after the EV maker posted a series of cryptic social media posts. It posted a video clip of a black hubcap-like object with the Tesla logo spinning before flashing the numbers 10-7, likely referencing a product unveiling on October 7th, Tuesday. A second post appears to show a car parked in the dark, revealing only its headlights. We'll continue to update you on the event as more details emerge, but those shares are up 2.5%. As always, you can scan the QR code below to track the best and worst performing stocks with Yahoo Finance's trending tickers page. Political chaos sending French stocks lower after the country's new prime minister resigned after less than a month on the job. Yahoo Finance's Ramzan Kamrali joins me now live from our London studios. Less than a month on job, and didn't he just also put together a new government, Ramzan?
Just put together. The ink was barely dry on the paperwork.
Yeah.
It was less than 14 hours, actually. In fact, he's lasted, to be precise, 27 days. So, I mean, it was a shock, to be honest. And it has, as you saw there, sent the CAC 40 lower. In fact, it's the only major index in Europe that is lower at the moment, all of trading in the green right now. And there are now major concerns about the dysfunction in the Eurozone's second largest economy. Now, Le Cornu was seen as a close ally of President Macron, but his new cabinet lineup, basically, he hadn't really pleased anyone. His opponents hated it, as you would expect, but his allies didn't like it either. And so this is what's led to this sudden, unexpected resignation. He was actually Macron's third prime minister that he's appointed since he snapped parliamentary elections back in the summer of 2024. And that's a vote that left the French Assembly, well, pretty divided in a pretty nasty way as well, and has made governing pretty much impossible. All three of these prime ministers have now left office, obviously, and the big issue has always been the budget. And France has never been able to sort out its budget since these snap elections. They're trying to cut spending and increase taxes, but no one is coming to an agreement. And it's not a surprise that French banks were the biggest decliners today on the CAC 40 in Paris, and the bond yields rose and the euro fell against the dollar. So the market reaction, as you would expect, basically.
Okay, so let's talk about another potential leadership change in Japan this time, where it looks like that they are set to have their first female prime minister.
They are indeed. And it's over the weekend. Sanai Takaichi, she was elected the leader of the ruling Liberal Democrats, which means effectively it looks like she will become prime minister by the end of the month. As you say, the first female prime minister for the country too. Now, Japanese stocks, you can see there, Nikkei up 4.75%, record highs there. Unsurprisingly, the yen weakened quite sharply against the dollar. And the reason is because investors think that what they've called it, they call it the Takaichi trade, which means there'll be more fiscal stimulus from this new prime minister. She's not only expected to introduce more spending, but there's another thing that she's very likely to do, and that's to put pressure on the Bank of Japan to keep rates low. A play out of the Trump handbook, you might say, in fact. So really interesting stuff in Japan. It's been on a bit of a tear there, as you can see, and it's really 4.75% in one day and at a record high is quite something on a prime minister, first female prime minister, and making history.
Yeah, Ramzan, thank you so much. Great context for here outside of the U.S. Appreciate it. Well, as we've just been discussing, Japanese stocks surging after the country elected its first female prime minister, or seemed poised to. My next guest says Japan is one of her favorite markets outside of the U.S. Joining me now, Marianne Bartels, Sanctuary Wealth Chief Investment Strategist. Marianne, good to see you. We'll get into the U.S. in a moment, but I did want to start with Japan and the developments there, because even before this leadership change, you were liking Japan. What's the investment case there?
Well, there's a lot of structural change that's happening that's actually led to what we call a secular breakout in the market. It was in a 35-year secular bear market. Once it's cleared its all-time record high, that signaled to us that something was dramatically changing and setting the stage for a secular bull market for Japan that could last maybe about 15 to 20 years. And, there's been governance changes, so companies are performing better earnings. So there is a fundamental case for this as well. And we do think a lot of investors are underestimating the change that's happening in Japan.
And so how much more upside do you think there still is? And sort of how do you, when you're trying to figure out where to allocate money, Marianne, how do you think about how much you want to put in Japan versus some of the other global markets?
It's a great question. It's an asset allocation question. We're still of the belief that the United States will continue to lead international markets, but we're seeing breakouts in Europe, Korea, emerging markets, ex-China, which is telling me the new leadership is coming from outside of the United States. So I think it's good for clients to start diversifying their assets outside of the United States. And it really depends on the risk profile of the client, but you can go anywhere between 5, 15, 20% into the international markets. I don't think I'd be at 20%, but I may be looking to add maybe 5% exposure to the international markets.
Interesting. And certainly that's been a shift this year overall that we have seen from a lot of investors. But let's get back here to the U.S. because there's interesting things going on here as well. We've got a government shutdown going on. We've got a lot of AI headlines still continuing, Marianne. So what does the relative upside look like here in the U.S. versus, what we're seeing in some other places around the world?
Yeah, it's certainly a busy Monday. There's a lot of different news items out. We're still in a secular bull market. Our secular bull market started in 2013. We think markets peak at 10,000 or 13,000. So I still think there's a very long runway for investors. But looking at this year, our year-end target has been 7,000, and we think in early next year we can get to 7,200. If the market keeps moving at the way it's moving, we'll get to 7,200 before next year. But I think what's important for investors to know is that this bull is still running. And when we look at government shutdowns, historically, there's no impact on the economy or markets. And when we go back and look at the last Trump administration, and I believe the government was shut down for about 34 days, and it happened going into the fourth quarter, into the beginning of the new year. So it was part of the end of 28 into 2019. Markets actually rallied 10%. So I do believe government shutdown and all the news will give investors, some pause, concern, some angst, but there's no documented evidence that it's really materially impacts the markets.
The thing that has been materially impacting the markets has been the AI trade, right? And we got yet more headlines this morning from OpenAI, this time this partnership they're striking with AMD. But as you know, Marianne, there's also been a lot of hand-wringing and concern about, whether this is getting too toppy, whether it is a bubble. How are you thinking about that?
I love that you're talking about that it's a bubble. I love that all the airways are saying it's a bubble because it means then it's not a bubble. When you're in a bubble, you have investor euphoria. And no one sees anything bad happening. It means that things are going to continue to be great. They're always going to be great. And we haven't quite gotten there yet. As I said, I think markets peak out at 10,000 to 13,000. So I basically am saying that markets can continue to double here before we ever have a major setback where I would say that we would be moving into a secular bear market. That doesn't mean we can't have corrections along the way. It doesn't mean that you can't have a bear market correction between now and then, which I think will be at the end of the decade. It just means that you have that correction and you go on to all-time new highs. Technology, I'm not concerned about the AI trade because it's founded on earnings. Now we're moving into third quarter earnings, but when we look at second quarter earnings for communication services is where Google and Meta are hanging out, and Netflix. Those earnings were up 44% year on year. And when we look at technology, tech earnings were up over 20%. Valuations are nowhere near bubblicious. Yes, are they stretched and at the high end of valuations? They are, but they're not bubblicious. So I still think we have a very long runway here.
Marianne, it took me a minute to wrap my head around what you were saying because I don't think I've heard anyone else say the number 10,000 with reference to the S&P 500, that kind of visibility looking that far out. So I just wanted to stop to kind of pause and put a fine point on that. So you're talking about essentially a rally that should last the remainder of this decade that will take the S&P 500 to 10,000?
Yeah, possibly 13, because we always overshoot. So it's somewhere between that 10,000 and 13,000 range. And when I look technically at the tech names, when I look at, growth versus value, I easily can get to those numbers. So this really is a growth-led rally. And what I love about it is the world is in a secular bull market for equities. I'm seeing a secular bull market here, which we started in 2013. Japan is just starting a secular bull market. Europe is entering a secular bull market. And emerging markets are in a secular bull market. I don't think I've ever said that in my entire career. I think that the runway for global equities is significantly higher for the next 4 years.
Wow, that's some bullishness there, Marianne, and I look forward to catching up with you again soon as we continue perhaps to move toward those levels. Thank you so much.
Thank you.
Coming up on Yahoo Finance Opening Bid, our executive editor, Brian Sazi, like me, enjoying the news flow here this morning. Saz, what's coming up on the show?
Julie, things before 7 a.m. were a little quiet. We're looking at that Japanese election, and then boom, Verizon's got a new CEO, someone we know very well, Dan Schulman, longtime Verizon board member. And of course, that OpenAI, AMD deal. Wow, that's big news for AMD and its fight against NVIDIA. I mean, lots of stuff going on, Julie.
The news gods are smiling on us this morning. Besides, looking forward to opening bill. That does it for Morning Brief. Much more ahead on Yahoo Finance. Keep it right here.
Monday morning from Yahoo Finance's New York City headquarters studios. I'm Yahoo Finance Executive Editor Brian Taza. You're watching PJT Partners at the New York Stock Exchange, ringing that opening bell. Capital Southwest getting things underway over at the NASDAQ. Government shutdown day 6, but that isn't stopping investors from getting prepared for the looming earnings season. That earnings season will kick off this week. Results out of Delta and Corona and Modelo beer maker Constellation Brands. It's also not stopping companies from pushing their businesses forward into 2026. Something very much on display in news today that Fifth Third is buying Comerica for $10.9 billion. Meanwhile, AMD striking a huge new deal with OpenAI, which may see OpenAI become a 10% shareholder of the chip giant. And Verizon, and this just broke moments ago, is bringing former PayPal CEO Dan Schulman out of semi-retirement to become its next CEO, replacing longtime CEO Hans Vestberg. Lots going on this morning. Lots we're going to dig into here for you. All right, first, let's head down to the NASDAQ and check out Yahoo Finance senior reporter Ali Canal. See what's hot in the markets this morning. Ali, what's hot is all things AMD.
All things AMD, OpenAI, and shut down who? I mean, the market's clearly ignoring that. A lot of this news overshadowing some of the risks that we could see on the policy side. We have all three major indexes opening the day in the green on the heels of that AMD, OpenAI news. You're seeing the Dow up 0.5%. We have the NASDAQ is up 0.5%. The Dow is up around 60 points, and the S&P up 0.3%. We'll see if we can get yet another round of records for both the Dow and the S&P 500. And then if we take a look at the chip space to see how all these players are reacting to this news, you're going to see that AMD is up a whopping 34% at the open. Truly astonishing. If we take a look at the year-to-date gains, we are now up 85% thanks to the move that we're seeing today. But that is weighing on some of these major chip players like NVIDIA. Some investors questioning the dominance here with NVIDIA, which is a competitor to AMD. We're seeing shares down a little over 1%. Some other chip makers on the move. You have Broadcom down roughly 0.8%. We are seeing Micron up 4%, TSMC up the same amount, just around 3.5%. But let's not forget, Brian, that if we take a look on a market cap weighted basis, look at NVIDIA there, still up $4.5 trillion in market cap. So even though we're seeing some losses today, I don't think you can understate the importance of NVIDIA within this AI ecosystem.
Yeah, Ali, I don't think NVIDIA is going out of business on this AMD news, but nonetheless, a nice win for AMD. All right, here's what I'm tracking out of the gate today. Step aside, NVIDIA score big win for NVIDIA rival AMD. AMD and OpenAI revealed a multi-billion-dollar partnership to collaborate on AI data centers that will run, of course, on AMD chips. The deal will see OpenAI purchase 6 gigawatts worth of AMD chips starting next year. What's perhaps more interesting is that OpenAI will receive warrants for up to 160 million AMD shares, or roughly 10% of the company. AMD shares are ripping higher in early trading as a result. Crypto comeback. AMD shares aren't the only asset rallying hard to kick off the week. Price of Bitcoin is hovering around fresh records after hitting a high of $125,660 this weekend. Chatter is that the political dysfunction seen with the government shutdown is boosting the appeal of crypto, in part because it erodes trust in the U.S. dollar. And fire up another earnings season. Earnings season officially begins this week. Results out of Delta and Constellation Brands. Something to watch is that analysts expect Magnificent 7 earnings growth will have decelerated from 28% to 14% in the third quarter. See how investors digest that possibility for these hot names. Meanwhile, earnings season will coincide with the next Fed meeting later this month and lingering concerns Trump tariffs will put us, the U.S., into a recession in 2026. Here's Mad Money host Jim Cramer. He told me in a new episode of the Opening Bid Unfiltered podcast what he thinks about Powell and the economy.
I think they're fine. I think that Jay Powell's doing a great job. I don't know how he does it with cartoons written, "You're fired." Jay is an amazing guy. And I met Jay years and years and years ago, just at a party. And I said, this guy is like really smart.
Recession next year or no?
No, are you kidding me? I'm not worried about a boom over here.
Jim, looking for a boom. Love seeing Jim. You can check out that episode now on the Yahoo Finance homepage. Here are my opening bid roundtable. Miramar Capital co-founder and senior portfolio manager Max Wasserman and Yahoo Finance senior reporters Ali Canal and Inez Ferre. Good to see you all. Max, coming out of the block here with you. This OpenAI AMD news. AMD shares ripping higher as a result. Zoom out here for us. Doesn't this send an ultimate signal that if you think we are in an AI bubble, maybe this isn't that isn't actually happening. If investors are willing to pay up more for AMD on news like this, doesn't it send a message that perhaps the AI trade is not done yet?
Good morning. And yes, I don't think we're in a bubble yet. You know, the multiples aren't signaling like you have in 2000, where the S&P was roughly around 34 times earnings. I mean, you're still roughly 25 to 27 times. But yeah, it's getting lofty. I mean, I think the AMD news tells you that there's an appetite here. And as long as you have the Fed in the background, I think, willing to cut interest rates and an administration wanting to cut interest rates, there's no reason for this appetite to slow down in the short term. I do think if earnings start to show a peak and a deacceleration in growth, people will start re-examining. But you can see by the action in the market right now, the appetite is strong. And I think it will remain strong until that object hit something, until something changes people's point of view. But no, I don't think we've peaked just yet, but we are very close.
It is interesting, Inez, to see so many of these new tie-ups in the AI infrastructure space. You have AI, you have AMD now with OpenAI, you have NVIDIA linking up with Intel, the government with Intel. I mean, there's so much activity going on right now.
Yeah, and there's also concerns about the circular sort of structure to everything, to all these companies that are linking up together in these ties. But I just want to underscore, I mean, what we're seeing with NVIDIA right now, 38% at the open, adding $101 billion in market value. I mean, this is definitely the sort of shot in the arm that NVIDIA needed, the boost that NVIDIA needed as it competes in this AI chip space as well. And just to underscore that, this is the second largest rise for AMD in the last 40 years, the second largest one-day rise. But certainly this underscores the sort of the AI investment, the CapEx that is being spent, the amount of investment in AI that is driving really the economy forward.
And Ali, of course, it's important to see OpenAI placing orders for AI AMD chips for next year. You know, that I think goes a long way in debunking this notion that we are near peak AI CapEx. So push that aside. But I think it's a very important signal, perhaps more so in this news with AMD and OpenAI, that OpenAI is willing to take a 10% stake at AMD. I just think, OpenAI is not led by dummies. If they thought AMD was near some form of profit margin peak, they wouldn't want a 10% stake in the company.
Yeah, that's a good point, Brian. And we're in this moment, you were just talking about the circular movement of everything, where these AI giants are essentially funding each other's growth. I mean, OpenAI is nowhere near profitable yet. They're spending aggressively, but with that stake, there is maybe that hope that they're going to reach that profitability inflection sooner than later. And for OpenAI, they're really just hedging their bets, moving beyond a name like NVIDIA. We were talking earlier about the potential bubble risks, and we have heard that expressed from some executives, even some Wall Street analysts. For example, Jeff Bezos, Amazon CEO, he was at an Italian tech conference last week, and he talked about this, and he said we could be entering an industrial bubble, but ultimately that's going to be a good thing for society. We also heard from Goldman Sachs CEO David Solomon, who was a little less optimistic. He said that he expects growth over the next year, but still there is a possibility that some of this capital won't deliver returns, and a market drawdown in the next 12 to 24 months, quote, wouldn't be surprising. And then you're seeing other analysts like Evercore ISI, for example, boosting their expectations that we could see a bubble next year that could fuel a melt up in equities, and just really goes to show how concentrated we still remain in this market. So the profitability is really the question mark here. When are we going to start to see these returns? And are investors willing to be patient enough before any potential bubble pops?
Max, I know what's going to happen today. People are going to wake up, they're going to see this AMD news, they're going to buy some AMD as it's going up. They're going to also, at the same time, probably buy more NVIDIA that they've been holding for the past 2 years. Level set for us. What is the course of action when you're seeing all these AI stocks essentially go up and to the right almost every day, and they're all doing it in unison?
Well, I mean, people, investors should take a note. I mean, look what just happened to Oracle. Oracle did a huge spike on similar type of news, and the stock rallied like 40%, and now it came down about 10%. Don't chase this here. I mean, I think your person said it the best. I mean, they're funding each other. That should make people a little nervous here. And the money is just going around in circle from these companies to each other. So any monkey wrench in that and the show is over. The companies will do well, but the valuations will eventually come down. I can't tell you when it's going to happen, but when you see each other funding each other, that concerns you. When you look historically at multiples and valuations and growth, they are valuing these companies at growth in perpetuity, and we all know that doesn't happen. Long term, yeah, these are great companies. We have investments in them. But again, these multiples and getting in this day, you're taking such a risk, and it's asymmetrical at this point. You're in the 8th, 9th inning of this game. Don't chase it here. I think people are going to be very surprised because sentiment can change in a moment, and it will be like catching a falling knife.
Will earnings season, Max, change that sentiment? Will that be the rude awakening that says to investors, you know what, maybe I shouldn't be paying 90 times forward earnings for this company or a company?
Only if the earnings are surprisingly lower. If it's just about the same or slight less, I think there's too much liquidity in this market yet. And with the Fed looking to add more liquidity to the market, I think it's going to need more. I think you're going to need some kind of comment from a multiple set of sources that says things are slowing down the rate of growth. So I'm not expecting this earnings to throw a monkey wrench in it, but yes, I'm expecting the next couple of earnings will throw a reevaluation into these companies. Great companies, but this valuation is getting a little absurd at this moment, and all you're doing, it seems like you're going to Vegas here and you're rolling dice. Good companies, but long term, the valuation's discounting many years in advance, and we all know there can be a monkey wrench. So I caution investors, have a diversified portfolio of these. Don't be so concentrated. I mean, we are in the 8th inning in valuations.
Inez, you track a lot of earnings. What are you looking for as these results start to trickle in this week?
I'm looking for commentary on the rate of growth.
Inez, how about you?
Same thing. I mean, it's going to be investments, it's going to be returns, and it's going to be looking forward into 2026. And so far, Wall Street doesn't see this rally sort of letting up. Yes, nothing goes straight up and to the right, but they definitely see the Fed easing being very, and the CapEx that's spent in AI being very stimulative to the economy.
Allie, maybe whatever earnings season does or doesn't do it, maybe it doesn't even matter. I mean, the Fed is probably going to come out here end of this month, cut rates again, and that is going to support higher stock prices.
Yeah, right now the market is pricing in 2 more Fed rate cuts before the end of the year, and we've been hearing across the board from Wall Street strategists that that is helping fuel the recent rally that we've seen. But I still think earnings are incredibly important, and after the success that we saw in Q2, Q3 earnings season, I mean, I think you could say there is another high bar to cross. We had JP Morgan, Goldman Sachs, they're optimistic on this earnings season. Goldman Sachs saying that the results should come in better than expected due to the tailwinds from AI, along with this resilient economy that we've seen in the face of multiple headwinds. We keep talking about tariffs making their way through the economy, how that could impact margins, but we haven't really seen that reflected in these results. We see a lot of companies absorbing costs, not necessarily passing those on to consumers. Could that change this earnings season? Could we get some more commentary about that? That's something that I'm going to be watching closely. Goldman Sachs strategist David Kostin, he did say that estimates are too conservative in light of the economic data during the quarter. So again, that resilient economy narrative. S&P profits are expected to rise 7.2% year over year. Now that is the smallest gain in 2 years, but again, this resiliency in the face of tariffs and increased inflation. Then you had Morgan Stanley strategist Michael Wilson adding that a modest reflation next year could restore positive operating leverage, something that we haven't seen since 2021. So I think heading into this earnings season, it's still all about the AI companies. Are they showing that growth, showing that demand? But also, what about the other companies, the other 493? How are they doing in weathering some of the volatility that was introduced in the spring? That's something that investors are also going to be watching closely.
Well said, Allie. Big thanks to my opening bid roundtable, Max Wasserman, Allie Canal, and Inez Ferre. Appreciate it. All right, will AI ruin software companies? That's the vibe swirling around a lot of software stocks right now. We have Zoom Info's founder and CEO Henry Schuck in the house for my Power Player segment. I suspect Henry will have something to say on the AI crushing software narrative. We'll be right back. Welcome back to Opening Bid. Wall Street coverage initiations on blockchain play Figure trickling in after the company's mid-September IPO. Bernstein is out with this today, initiating coverage of Figure with an outperform rating and a $54 price target, which assumes about 35% upside from current levels. Says Bernstein analyst, quote, just as stablecoins tokenize the dollar and drive instant payments without any centralized intermediary, tokenized loans digitize and disintermediate lending markets. Wow, mouthful there for these guys. Figure is a market leader in credit tokenization with a 75% market share in tokenized private credit. And if you have no idea what I just said, just get at me at X on Brian Sauce and I'll tell you what I said. At $41 currently, Figure stock is trading above its $36 opening price on its September 11th IPO day. Interesting company. Software stocks have had a rough go of it lately. Experts I've talked to have pinned the blame on this view that AI will derail many software companies and in some cases render them totally obsolete. While on the extreme side, the concerns have weighed on valuation multiples for software companies. Software companies are not taking that threat of AI sitting down, though. Many are aggressively reinventing their businesses to benefit from AI. One of those names includes ZoomInfo, which is full steam ahead on its AI efforts. Let's talk more about all this with ZoomInfo founder and CEO Henry Schuck. Henry, good to see you as always, sir. Let's start with some of the things you are working with on AI. I know you have a lot of new initiatives that are starting to hit really now and into the next year.
Yeah, great. Thank you for having me, Brian. I think that the big thing here is that people are rightfully nervous about AI initiatives within companies creating any sort of real return for those companies. There's this MIT study that was out about a month ago or a couple months ago that said 95% of AI initiatives that are taking place inside of a company show no measurable ROI for those companies. And that is a very obvious thing that we actually see in go-to-market organizations, where we think this is actually the worst across all departments within a corporation, is that inside of sales and marketing organizations, they brought on a number of technologies that are supposed to give them AI productivity and opportunities to reduce staff and get more out of their existing staff and generate more leads, and they're not actually turning into any real ROI within those departments. And what we've learned is without a contextual learning base and contextual data, that just slapping a wrapper over a ChatGPT or a Claude doesn't give you any sort of value for the solutions that you're delivering. And over the last couple of years, there have been a number of these AI startups that have come into the go-to-market space. They've built products that are a wrapper around a simple OpenAI chatbot, and then they haven't created value within those companies. And so we've spent a lot of time working on how do we deliver to our customers a contextual data service that understands everything about them, everything about the companies they sell to. And then once you have that together, how do you build AI on top of that? We're releasing today our Copilot Workspaces product that does exactly that, builds a contextual data service, learns from users' interactions, has domain expertise, and we think that's far differentiated from just slapping a wrapper on an OpenAI chat interface.
Henry, every day I wake up and I see some more news on OpenAI, and I think they're having a developer conference today or early tomorrow. It looks like they want to get more in the enterprise space. You know, as a founder of your company, do you worry about what OpenAI is doing?
Look, OpenAI is a partner of ZoomInfo's. We use OpenAI, we use Anthropic. We think that there is a real opportunity to leverage these AI technologies to drive real productivity inside of go-to-market organizations. But we also realize that you can't do that unless you have real context and you're learning from your customers and your users' interactions, and that learning is domain specific. And so for us, we're really learning. We have years of learning from what account executives, account managers, sales development reps inside of companies are doing every day, how their interactions turn into more opportunity for their business, how some interactions are wasteful. And then we can use all of that learning on top of the AI and the context data services that we're providing our customers to allow them to be more precise, more predictable, and then drive productivity within those organizations. But look, forever, companies have had the option of building software in-house. instead of going out to a software vendor, they could always build their own software in-house. That is expensive. They have to maintain it. They have to maintain access and security and governance. And when you have limited capital resources, you're almost always better putting those resources to your product, to your customers, to driving better customer experiences than trying to build something that a software vendor is best in class at and can deliver for you with AI layered into that.
You and I have talked about this in the past, Terry. Your company has a ton of cash. You've bought back a lot of stock. But just given how fast AI is moving, the pace of change, the development rate, are you inclined to maybe purchase less stock and you're going to have to invest more to keep the platform competitive?
Look, I think I feel really good about our investment levels in our product and R&D across our industry. We are the largest investor in R&D for go-to-market teams, so I feel very good about that level of investment. We've continuously invested more in our product and our R&D efforts over the last number of years, but when we feel like our stock price is below the intrinsic value of the business, we're also going to be aggressive buyers of our shares.
You mentioned Copilot and what you're working on there, Henry. What will that do for your platform, and do you upcharge your customers for using that?
Yeah, so we are monetizing a migration from our sort of legacy platforms that are not AI native into our Copilot Workspaces platform that is AI native and is surrounded by AI productivity tools, the ability to build decks for your clients, build account plans, automatically update your CRM system, prioritize and score your accounts. And so there's a number of additional functionality that we've been able to release by leveraging AI in our development processes, by leveraging AI to deliver product to our customers. And so we are monetizing that migration as our customers come off legacy non-AI products and onto our AI products.
This is an interesting time in the economy. Large companies, they've handled these tariffs pretty well, but a lot of the medium-sized and smaller companies that I talk to, Henry, they're really starting to struggle. From your vantage point, all the data you get, what is the vibe on the U.S. economy going into your end?
It's actually like I feel the vibe is pretty positive, more positive than I've seen, outside of the April tariff announcements. It's more positive than really I've seen it in the last sort of 2 to 3 years. Our customers want to lean into new technologies that drive productivity. I think they're a little bit shell-shocked by the changes in the traffic to their websites that AI has driven, and they're trying to figure out solutions out of that. One interesting thing that we've seen, Brian, is over the last 2-3 years, companies have been reducing the number of salespeople that they've had on their teams. And most recently, what I'm hearing from customers is that they're stepping on the gas again on hiring new salespeople, primarily because now these AI overviews from Google and the LLMs have reduced traffic to their websites, and they have to generate demand somehow. And so they're leaning back in onto the sales organizations to generate that demand. That's something that I haven't seen for the last 3 years. And so I think they're pretty bullish right now.
Lastly, Henry, if we're having this conversation 1 year from now, what technology will be on your platform that you don't have today?
What technology will be on our platform? We are going to continuously automate out the work that account executives and account managers are doing. We look at the universe as here are all the jobs that account executives do inside of a company, salespeople. Here are all the jobs account managers do, all the jobs SDRs do. And we want to automate out as much of that as possible so that we can continue pushing sales reps and account managers to the highest value work that they're doing. I would tell you we're kind of 30 to 40% of the way there. And over the next year, we'll probably push another 30 to 40%. And so we've automated out most of the tedious human friction out of the sales process and let the humans in organizations focus on the higher value activities.
You're not automating yourself out, Henry, right? I mean, come on, man.
Oh, maybe at some point, but not in the next year.
All right. ZoomInfo founder and CEO Henry Schuck, always good to see you. Have a great week. I'll talk to you soon.
Awesome. Thank you, Brian.
All right. Coming up, Yahoo Finance's Market Catalyst. We bring you the news behind the market moves, the trading day you won't want to miss. Lots going on in the markets today.
Not a very good feeling, is it? I'm Blake Anderson, and if you've ever dropped your phone, wallet, or fries between the seats, you already know why I use the console catcher. This thing is simple, but kind of brilliant. It's a flexible insert that slides between your seat and the center console and stops everything from falling into that annoying seat gap. You
know that gap. The one where your phone slides in, disappears, you find yourself halfway under the seat, trying to grab it while you're still driving. But no more. You just drop the console catcher in, no tools, no adhesive. It fits snug in just about any car. And when it's installed, that gap is gone. I've got the black one because it matches my seats, but there are plenty of colors to match your car as well. No more fishing for fries, earbuds, you name it. I've had mine for months now. It blends in, doesn't budge, and I've honestly forgotten how much I used to drop things down there. It's one of those fixes that you don't really even think about until you finally stop losing stuff down there every time you drive. If you don't have one yet, scan the code on your screen now and get a console catcher today. Stop feeding the seat gap monster.
Whoa, 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 whoa! You've been eating corn wrong your whole life. Introducing the Cobb Gobbler. Just line it up and pull. That's it. No mess, no strings in your teeth. It is weirdly satisfying. Once you grab one of these, let's be honest, you're never going back. Scan the code on your screen now.
Say hello to the Cobb Gobbler, the effortless corn stripper. That's cream of the crop with its ergonomic design. Peeling corn has never been easier. Crafted from solid, rust-proof stainless steel, Gobbler is built to last.
Market Catalyst. I'm Julie Hyman. We are 30 minutes into the U.S. trading day. Let's get to the three market catalysts we're watching this hour. First up, OpenAI and AMD strike a multi-billion-dollar deal. We'll bring you the details. Plus, M&A Monday is alive and well as Fifth Third announces a $10.9 billion deal for Comerica. And we break down the market action as stocks look to hit fresh records. All that and more coming up on Market Catalysts. Let's take a look at the major averages to kick things off. We're actually seeing the Dow under some pressure now. It opened higher and then quickly went lower, off by about 220 points at the moment. But the S&P 500 still hanging on to a gain of about 0.1%. And the NASDAQ hit an intraday record. Right now, it's just up about 1/4 to 1/3 of 1%. So we'll see how that plays out. We've seen some more fireworks in other asset classes, notably Bitcoin rising to a record over the weekend, just below 125,000 at the moment, and gold futures above 39.70 at the moment and pushing to a new record as well. And then elsewhere, as we look at what's going on in large cap tech and the reasons behind the NASDAQ outperformance today, has a lot to do with that new agreement between Advanced Micro Devices and OpenAI. AMD up 27% today alone. If you look at the year-to-date chart, we've seen that it's kind of muddled along, particularly in the first half of the year before taking off a little bit. But then obviously this leg higher that we now see today on the back of that deal. Elsewhere, we're seeing a mixed picture. Tesla shares are rising as it teased some kind of new product announcement tomorrow. So we'll be getting a close watch on that. And elsewhere in semiconductors, besides AMD, NVIDIA under a little bit of pressure. Of course, it is another major partner of OpenAI, so under some pressure on that. But TSM and some of the other sort of chip infrastructure, chip equipment makers are catching a bid here this morning. AMAT as well, Applied Materials on that list. Well, let's get more on this now. OpenAI and AMD announcing a multi-billion-dollar partnership. Shares of AMD surging on the deal. It's the latest sign of activity in the AI space. It comes just a week after NVIDIA invested in OpenAI. Joining me now, Mary.
Thinking about AMD, but also we have platforms for NVIDIA that are good for inferencing as well. So the question is, will AMD eat into what we thought would have been that upside for NVIDIA? And there's a good chance that at least people are investing to make sure that they have a solid alternative to NVIDIA on that market.
So, Maribel, does this mean for investors that you just kind of buy everything, right? If you have this rising tide idea, I mean, on the flip side, you can just buy the S&P 500 or the NASDAQ 100 because they also include all of this stuff. Like, how choosy do you need to be as an investor?
So I think it's very difficult if you're coming into the space right now to see a tremendous upside for these AI stocks. They've had a tremendous run up. It seems like almost every day there's a big deal. There's, I think the surprise winner in this has been someone like Oracle, who did see quite a bump. Of course, that's come down a bit, but even still, Oracle had not been sexy for a while. So this just goes to show that AI can make anybody sexy at this point. So one of the things I think we're seeing is, I think you have to be very cautious if you were coming into the market now. If you're already in and you have positions, you can hold, because there is still tremendous growth and upside that we have yet to see in this market. I will say, if I look out 2 quarters from now, I think next quarter's fine. I think we're still going to continue to see growth. I think at the slightest hiccup that we see in this market, people will run for the hills because they'll feel that the stocks that they're looking at are extremely overvalued. So I would actually be thinking about bets that might be a little more long-term but still have some upside. One of the things NVIDIA has been talking a lot about is this move to physical AI. We have not actually seen that yet. There's a lot of momentum that could be in industrial, it could be in the edge use cases of AI. So people that are building chips that, if you're looking at the chip market, that would go into smaller form factors that would be seen out at the edge in a store, in a manufacturing plant, those kinds of things.
Maribel, give me some more sort of concrete examples of that. So if you're looking for those industrial cases, the so-called physical AI, what kind of companies are sort of participating more on that side of things?
So if you look at somebody that's well established, for example, but could still do very well in that space, you'd be looking at a Qualcomm. You could be looking at a Broadcom. You could be looking at some of the Chinese AI chip companies, which will not necessarily meet the price performance window of NVIDIA, but could be very good in a whole other range of use cases. So Camicon, for example. So there's a wide range to look at here, but I think I would be looking at markets that still have a good growth opportunity. They have a use case, but they have yet to deploy. So we were actually talking to quick service restaurants that are now building edge AI. They're actually putting AI in their quick service restaurants. People are putting AI in their stores. So that leads to some of the smaller footprint use cases. But honestly, right now, it's who knows.
Yeah.
Could be anything.
Well, and it also sounds like, though, this potential hiccup that you're anticipating, and usually these things are inevitable in markets, that you get that kind of occasional volatility, especially with something that is an expanding, innovative industry like this. It sounds like you would sort of batten down the hatches and hold on. Like, in other words, when that panic hits, you're not going to be participating in that panic.
I think everybody has to make their own call on this one, and it really depends on what you bought in at, right? So this market, if you look at the fundamentals of the market, there will be growth. It will come in patchy growth. No growth is perpetually linear up and to the right. So I do think we're going to see some of these little step functions. And as a result of that, you have to say, is this something that you want to keep for the long run, or are you trying to be opportunistic? If you're opportunistic at this point, these chips seem to be at an all-time high. They could have a few more clicks in them. But having said that, it's what's your risk tolerance?
Yes, good precision there, because people have a wide swath of risk tolerance, to be sure. Maribel, thank you so much. Appreciate it. Coming up, we'll take a deep dive into OpenAI's journey to its $500 billion valuation. Plus, an expert tells us why more companies choose to remain private. That's next on Market Catalysts.
All eyes are on Delta. The airline's Q3 earnings land on Wall Street Thursday and give investors their first look at the true strength of the airline sector. So, can travel demand outweigh the rising fuel costs and economic uncertainty? Don't miss our full coverage on Yahoo Finance.
Hey, do you dread scrubbing away stubborn dirt and stains? I used to, until I found the Spinny Scrub. Let me show you why this little powerhouse is a total game changer. You can also scan the code on the screen now and find out more. This is the Spinny Scrub, your new best friend when it comes to cleaning. It's got a powerful motor that rotates at high speed, so no more scrubbing by hand. It comes with 5 different brush heads, so no matter what you're cleaning, you've got the right tool for the job. From your bathroom tiles to kitchen countertops and more, the Spinny Scrub has you covered. So if you want to make cleaning faster, easier, and way more effective, the Spinny Scrub is your answer. And right now, if you order today, you'll get 20% off. Trust me, your cleaning routine will never be the same. Go ahead, scan the code on your screen right now and get yours today. You'll thank me later.
Not a very good feeling, is it? I'm Blake Anderson, and if you've ever dropped your phone, wallet, or fries between the seats, you already know why I use the console catcher. It's a flexible insert that slides between your seat and the center console and stops everything from falling into that annoying seat gap. And when it's installed, that gap is gone. No more fishing for fries, earbuds, you name it. If you don't have one yet, scan the code on your screen now and get a console catcher today. Stop feeding the seat gap monster.
Titanium. Stronger than steel. Lighter than aluminum. Trusted in aerospace. Medicine. Advanced engineering. And now, redefining the way we prepare food at home. The titanium edge is prized for its strength, purity, and resilience. Resists corrosion. Never absorbs odors. And remains flawlessly food safe without ever breaking down into harmful microplastics. A breakthrough 3-piece cutting board set, double-sided, ultra lightweight, and built to last. With a sleek, metallic finish, it transforms your kitchen. Titanium Edge, now available through this exclusive television offer. The code to order now.
Out on the range, freshness is hard to come by. Whether you're riding, wrangling, or just chilling by the fire. Keep your liquids lassoed with the Liquid Lasso. Airtight and leak-proof performance that keeps bottles sealed, safe, and ready when you return to camp. And don't forget about Liquid Lasso's trusty partner, El Corco. It's bueno. Scan the code and tip your hat to the finest bottle wranglers in the West. Don't squat with your spurs on.
OpenAI is now the largest private company in the world with a valuation of $500 billion. How did it get here? OpenAI first gained mass notoriety in November 2022 with the launch of ChatGPT. The research tool gaining 8 million users in its first week alone, it ignited the widespread public interest in generative AI that we see today. Since then, OpenAI's growth has ballooned, becoming the go-to search engine for 24% of Americans in just a few short years. That's according to an Adobe survey. Joining me now to discuss the future for OpenAI after hitting this $500 billion milestone is Kyle Stanford, PitchBook Director of Research for U.S. Venture Capital. Kyle, it's good to see you.
Good to see you too.
So it has been an amazing journey that we have seen for OpenAI, and the valuation is obviously eye-popping here. What do you think is sort of the OpenAI special sauce within the fundraising world that has allowed it to just keep, generating this kind of fundraising for itself?
I mean, you kind of look everywhere and it's all really hot, right? Their revenues for the first 6 months of this year were higher than 2024. They've got partnerships with NVIDIA, AMD, Oracle, Microsoft, Apple. They've got, they were kind of first to market. So kind of everywhere you look, there's a high reason for these investors to, want to put money into here. So, I don't know if there's a singular secret sauce that OpenAI has, but all of those together just really make it an interesting company.
Yeah, I guess the secret sauce isn't so secret, right? Because we all see it in terms of the adoption of ChatGPT. What I find interesting, Kyle, is that, certainly when we talk to people, even people who are AI bulls who invest in it, they do share some of these concerns about the so-called circular economy, right? And the NVIDIA investing in OpenAI, which is using some of that money to buy NVIDIA chips, et cetera. Has that had any kind of effect on its fundraising ability?
You wouldn't be able to tell it if it has, right? If it's jumping from 100 to 300 to 500 in consecutive years and raising $40 billion from investors and secondaries going off at, $6.5 billion, every 6 months or so, if there is any hesitation because of the circular economy, you're not seeing it in the fundraising.
The other issue that has been sort of dogging OpenAI for a while now is this separation that it has been attempting to do or is going to attempt to do between its nonprofit and for-profit arms. That has faced some legal challenges. Is there any chatter on that in the fundraising world and what that's going to mean for the company going forward?
I think it's really tough to have too much chatter on that until you kind of, get the full run out of what's going to happen, right? Obviously, if it has to stay a nonprofit, that's going to be very difficult, but the way it's moving and the way it's partnering with all these big tech companies, it's tough to think that there's any more hesitation because of that either, right? Obviously, that got a lot of talk when Elon Musk was diving into and setting up challenges for Sam Altman and OpenAI, but there hasn't been too much talk about that specifically over the past few months.
Kyle, you've been covering this world for a while. how anxious do investors get to exit, right? And what would an exit look like for OpenAI? And at some point, like, what does that cycle tend to look like?
I think OpenAI is going to be very different than every other company we've seen go through the kind of venture life cycle, right? You're at $500 billion. You have ample amount of private capital waiting to take secondary shares, so you can get employees, early investors, the liquidity they're looking for. You have no real reason to go public now with the growth that they're seeing in the private markets. Like going public is going to add a little more cost and a little more hurdles to get through when they're just trying to operate and kind of really charge forward with their revenue growth. So I don't see an exit necessarily like a traditional exit from an IPO, or obviously not an M&A is going to happen. But an IPO is not going to happen in the next year or two for OpenAI, right? Until you start to see that private market capitals dry up for this company specifically, there's no reason for them to go into the public markets.
Are they going to be under any pressure to go profitable anytime soon, Kyle?
I don't actually know that they would be able to go profitable in the near term, right? When you look at the cost and the way that that's grown too, they blew their cash burn rate was about $2 billion through the first 6 months of the year. They're looking for $6 billion in total burn in 2025. That's not something that they would be looking to just cut and completely change their business model, right? They need that money to be put to work. They need it to continue growing, to be bringing out new models, to reaching new customers, to creating new inroads for enterprises into their business. So they're not going to be cutting that burn anytime soon. So I don't see this becoming a profitable company.
Go ahead, Kyle. What were you going to say?
Oh, I was just going to say, obviously the energy costs are another thing, right? If you're spending a lot of money to run all of these chips and all the energy that's taking, without energy prices coming down, they're going to have a huge cost in that category too.
And the final thing I wanted to ask you, Kyle, is with so much capital going to OpenAI, are we seeing other companies kind of be starved of capital and having trouble fundraising because so much is going in this one direction?
I don't think it's because of OpenAI, right? And when we look at the startup market, it's really kind of two different markets, all of AI and the rest, right? When you look at who's investing in OpenAI, it's Dragoneer, it's Thrive, it's SoftBank. Like those are firms that are not short on capital and are able to get capital in different areas than just the dry powder in their VC funds, right? So I think when you look at the rest of the market, though, if you are not an AI native company or haven't integrated AI into your business model, it's a really challenging environment to raise. So it's not going to be one single company that is taking a lot of the money from startups right now, but AI in general is having kind of like a 2021 looking chart up into the right every year, new deal count or new record deal count, new record deal value. That is taking money away from the non-AI companies who are unable to kind of create that revenue growth that they might have seen up through 2021.
Thanks, Kyle. Appreciate it.
Of course, thank you.
Well, despite recent strength in the IPO market, more and more companies are choosing to stay private for longer, including OpenAI. We spoke with OpenAI CFO Sarah Fryer to ask about the company's plans for a public offering.
To me, an IPO is just another form of a fundraise. So will we still be fundraising to keep funding compute? I suspect the answer to that is yes. And so right now we need money to invest in compute, money to invest in great researchers, and we need to keep bringing customers along by showing them value, whether it's enterprise customers all the way through to small businesses, to consumers.
And as we just heard from Kyle Stanford, he doesn't think it's going to happen anytime soon. Let's talk more about the state of private markets. We're joined by Eric Hirsch, co-CEO of Hamilton Lane, which is a global investment firm focused on private markets, including private equity, credit, real estate, and infrastructure, with $986 billion in assets under management and supervision. Eric, it's good to see you. It's an interesting moment, isn't it, as we have been talking about this private fundraising that has happened for the likes of OpenAI, but of course not just OpenAI. What do you make of it? And through your career, how has this kind of changed? What has been the real reason that so many companies are getting so large on the private side?
Julie, always good to be with you. I think what you're seeing is this is a sort of typical maturation and an evolution, which is if we go back a couple of decades, people wanted to be public. That was the hallmark. That was the stamp of success. That told your customers and your competitors that you had made it. That's no longer true today. So today, the number of public companies has generally been trending down and to the right for the last several decades. And there's a few reasons for that. It's expensive, time consuming, and all of that to be a public company. I know we are one. But it's also the fact that the private markets have continued to develop, mature, and grow to a point where there's adequate capital to allow you to stay private for as long as you want to.
And do you see any kind of change to that equation?
I don't. I think, frankly, this is just giving choice to the market. If you want to be public, and by the way, again, we made that strategic decision several years ago because we saw some real strategic advantages for Hamilton Lane to be public. But if you don't see those advantages, or you frankly see more advantage in being private and having private capital, private partners helping you grow, then you've got the optionality to do that. I think this is a good thing. It's not a great thing for the public markets because, again, there's just less choice going over there. But I think it's a good thing for companies to be able to chart their own path depending on which one makes the most sense for them.
Well, and it's also maybe one of the things that is less good is that, you know, most investors, the vast majority of investors, don't have access to the private markets, right? They can't invest in OpenAI. That maybe seems to be changing a little bit. Do you think it is going to change, and how quickly is that going to happen?
So I agree with you that has been a real downside for individual investors. If you're not part of a pension plan where those, frankly, a lot of those returns are coming from the private markets, you've basically been left out and left behind. That is changing. So with the advent of a series of products referred to commonly as evergreen funds, private markets are now being much more accessible to the mass affluent. That's still not everybody, but it's a big step forward for people with a couple $1 million net worth, and there's a lot of those people, as we know, in the United States, but that is happening now. And if you look at the exposure for that customer base, it's basically 0%. But the change is here, the change is coming, and I think it's going to occur very rapidly. The next question then tends to be, do you think we're going to get that private market access moved into the 401k market? And I think that's a different question.
What's your answer to that question, Eric?
I think we will eventually, but I think we're going to see more. We need more than simply an executive order or the administration saying, hey, let's make this happen. I think you're going to see real regulatory reform required in order for that to happen in a way that makes sense for the consumer of that product and the provider of that product.
I want to switch gears and just ask you as well about something that's been going on in the news, and that's the government shutdown. Because I know it's something you're watching, but I'm curious specifically. We've had the IPO window finally open back up, a number of IPOs. That allows exits for firms like yours and stuff you've invested in. With the SEC, you know, presumably on furlough like everybody else, does that run the risk of sort of slowing down that momentum?
I think this is a question of duration. My own view is that we're going to see this likely get resolved this week. But if I'm wrong and this stretches for weeks or longer, then I think you're going to see ripple effect. I think right now the market is telling you that they also believe this is going to get wrapped up and resolved in relatively near term. But again, if that proves to be incorrect, as we sort of see what happens or doesn't happen this week, then I think you are going to see ripple effects, not just simply from the SEC, but we're going to start to see some ripple effects across other broader parts of the economy.
So I guess then, all things being equal, let's say the shutdown is short. Do you think that the IPO window is, you know, that things are now sort of open for business again? And what does that mean for exits in your business?
Well, I think it does mean that you're open for business. If you look at how recent IPOs have traded, generally have been trading very strong. I think part of that is this sort of pent-up demand of the market is looking for more diversity and more product. If you're a primary public market investor, you are dealing with an equity concentration, market cap concentration, the likes of which we haven't seen in recent history. And so you've got a small number of stocks driving the performance of the indices. And I think investors are smartly looking to try to get more diversity in their portfolios. And I think that's been a big reason why you've seen strong performance. And once you see strong performance of recent IPOs, what does that result in? It tends to result in more IPOs.
Right.
That's a good thing for the markets. It's a good thing for the private markets who are using that as an exit environment. So I think all of that is a positive trend.
Eric, great stuff. Thank you so much for your perspective. I appreciate it.
Great to see you, Julie.
And for more private market data, you can head to Yahoo Finance or scan the QR code below to track private markets, including valuations, fundraising, and more. We got much more markets action coming up. Stay tuned. You're watching Market Catalyst.
code on your screen now and see why the Flash Force Tactical Flashlight has everyone talking. Definitely 10 out of 10. More powerful than I expected. Absolutely brilliant. I've got 3 more in my basket to get. Awesome. Excellent. The best flashlight ever bought. Hurry, this is a limited time TV offer. Scan the code on your screen now and get your Flash Force Tactical Flashlight today.
Hey, Blake Anderson here to show you the Veggie Vortex, the 3-in-1 slicer, shredder, and sanity saver that spins veggies and more into culinary gold. Scan the code on your screen now and get yours with this special TV offer, because this kitchen marvel is pure magic. Watch this. Potatoes? Boom. Chips in seconds. Hash browns so fast, the Pancake House is going to start calling you for tips.
Order up.
Cucumbers. Perfect slices for salads, sandwiches, or slap them on for a quick spa day. Ready to really go nuts? The Veggie Vortex chews through nuts like an over-caffeinated squirrel. Someone say cheese? Look at that, perfect for pizza in seconds. This thing's fire. It's got a suction base so strong it clings tighter than skinny jeans after a big Thanksgiving dinner. 3 stainless steel drums. Slicer, coarse and fine shredding. BPA-free plastic, dishwasher safe. The Veggie Vortex will turn mealtime into fun time every time. Get sucked into healthier cooking with the Veggie code on your screen to order now.
Titanium. Stronger than steel. Lighter than aluminum. Trusted in aerospace. Medicine. Advanced engineering. And now, redefining the way we prepare food at home. The Titanium Edge is prized for its strength, purity, and resilience. Resists corrosion. Never absorbs odors. And remains flawlessly food safe without ever breaking down into harmful microplastics. A breakthrough 3-piece cutting board set, double-sided, ultra lightweight, and built to last with a sleek metallic finish that brings modern precision to everyday cooking that's scratch resistant and dishwasher safe. From fast weeknight prep to professional-grade slicing, Titanium Edge replaces outdated plastic and fragile wood, delivering a surface as advanced as the material itself. Titanium has taken us to the stars. Now, it transforms your kitchen. Titanium Edge, now available through this exclusive television offer. Scan the code to order now while supplies last.
Why do all cars have this dumb gap? And why didn't we fix it sooner? Introducing the console catcher. Slides right in over top of your seatbelt. Nothing falls through anymore. And you don't just get one. You get a pair, driver and passenger. Scan the code on your... Ever lose anything between the seat again.
Stay tuned for a special free offer from Flash Force Tactical Flashlight. With its powerful telescopic zoom, the Flash Force Tactical Flashlight gives you a super bright light visible at a distance.
Welcome back to Yahoo Finance. I'm Allie Canal, live at the NASDAQ. Let's turn now to some of today's top analyst calls on Wall Street. First up, Micron, the chip maker getting a boost after Morgan Stanley upgraded the stock to overweight from equal weight, citing a multi-quarter stretch of double-digit price increases. Analyst Joseph Moore saying Micron is, quote, pushing the envelope on valuation, but does see price gains translating to substantially higher earnings power. He adds this pricing upturn should resolve any lingering questions around Micron's high bandwidth memory chips and set a $220 price target, signaling about 12% upside from current trading levels. Next up, Klarna. Wedbush initiating coverage of the buy now, pay later giant with an outperform rating and $50 price target. Analyst Scott Devitt calls Klarna a tech-enabled bank at the center of the commerce ecosystem with strong exposure to alternative payments, AI-driven underwriting, and digital wallet growth. Wedbush expects sales to climb about 20% a year through 2028, with profits growing even faster as new markets mature. The firm also highlighted Klarna's AI partnership with OpenAI, which now handles nearly 70% of customer service chats, one of the reasons they view the company as leveraging AI for both efficiency and scale. And finally, Shake Shack under pressure after Bank of America cut the stock to underperform, warning that margin pressures from rising beef costs and elevated competition could weigh on results. The downgrade also flagged that Shake Shack's plan to grow to 1,500 domestic store locations could be too ambitious, calling out saturation risks outside high-income markets like New York. BofA also lowered its price target on shares to 86 from the prior 148, citing a tough consumer backdrop and price-sensitive diners. We'll keep it right here on Yahoo Finance. We'll be tracking all the market moves throughout the session.
It's a big M&A Monday with the largest bank deal since 2023. Cincinnati-based Fifth Third will buy Dallas-based Comerica for $10.9 billion. It creates a bank with about $288 billion in assets. Joining us for more, our banking reporter, David Hollerith. Good to see you, David.
Hey.
So what do each of the banks get out of this deal?
Yeah, for Fifth Third, it means that their expansion efforts in the Southeast and Southwest is going to be turbocharged essentially by Comerica, which is a Texas-based bank's commercial division. They have like a very large traditional banking commercial business, which is heavily sought after, even by the country's largest banks. And so really for both banks, it's a big question around scale. Ever since the 2023, we call it the mini regional banking crisis, regional banks have been they've seen sort of the disadvantages to their size, being bigger than community banks in a certain way, and then also being much smaller than the mega banks. So they both have a need to grow. Comerica in particular, their stock and performance, their earnings performance has lagged peers for over a decade. And more recently, there's actually been activist attention on the bank. Holdco Asset Management published this 52-page, pretty critical report back in July, and their consensus was they'd taken a 1.8% ownership of common shares of Comerica, and they were urging Comerica to sell itself. They were even taking steps to do a proxy battle early next year, or I guess that would kick off in December. So there's plenty of pressure on Comerica. In general, there was some pressure on regional banks in terms of their stock performance relative to the bigger peers. Right. And Fifth Third is an acquirer bank. They're pretty strong. They have a very strong Midwest presence, and they're trying to grow in the hot markets, which have been the Southeast and Southwest for a while.
And so when you talk about this sort of in-between place that the regionals are in, bigger than the community banks, smaller than the mega banks like the Cities and Bank of Americas and JP Morgan, what does this increased scale, sort of do for them? How does it help them to better compete?
Yeah, for Comerica, it's a big deal because they didn't really have a retail franchise. And retail deposits are known as being some of the stickiest in banking. And so it's a lot more stability for them. For Fifth Third, it means that they have more scale, more ability to make loans using their deposit base and to expand into commercial banking, which is, they call it like C&I lending. That's kind of the hottest.
Commercial and industrial, right?
Yes, yes. It's one of the hottest places for traditional banking in the U.S. So.
And we also are at a moment where rates are coming down, right? So does that, I guess for banks, it creates both vulnerabilities and opportunities, particularly at that level where they don't have, for example, a big trading operation to offset some of that.
Sure, yeah. Interest rates coming down are generally seen to be good for regional banks that have, these bigger mortgage operations and the commercial real estate and also C&I lending.
So they could see more demand as rates come down.
Exactly. Whereas bigger banks are typically seen to be more asset sensitive, meaning that they benefit from higher interest rates because they get thicker margins. really to cut it, it's hard to know between any one bank how interest rates are going to affect them, and it all kind of depends on how things fare as interest rates begin to cut. So
yeah, and then finally, I'm also curious about the regulatory environment that allows a deal like this to happen, right? Because we don't see big banking deals that often. Is the regulatory environment more friendly to this kind of stuff right now?
Absolutely. I was speaking to this guy who's known as basically the Wall Street banking surgeon. He's done a lot of distressed deals in the past. And he had said to me last week that effectively this is the most favorable environment he's seen in a very long time, especially compared to the Biden administration in terms of their bank merger policy. And, you can't help but read through the fact that since 2023, there's some need for that, even no matter what side of the political aisle you sit on, that banks for a while have needed to merge to compete with the mega lenders.
Dave, thanks so much. Really appreciate your reporting on this, and fun to talk about a deal this morning.
Absolutely.
Thanks. We got much more markets action coming up. Stay tuned. You're watching Market Catalyst.
Hey, Blake Anderson here to show you the Veggie Vortex, the 3-in-1 slicer, shredder, and sanity saver that spins veggies and more into culinary gold. Potatoes? Boom. Chips in seconds. Someone say cheese? Look at that, perfect for pizza. This thing's fire. Ready to really go nuts? The Veggie Vortex chews through nuts like an over-caffeinated squirrel. It's got a suction base so strong it clings tighter than skinny jeans after a big Thanksgiving dinner. Get sucked into healthier cooking with the Veggie Vortex. Scan the code on your screen to order now. If you've ever tried to clean a garlic press, you are going to love this. Introducing the Great Garlic. No chunks, no squeeze, no stuck pieces. It's faster, cleaner. If you cook even a little bit, you're gonna need one of these. Scan the code on your screen now.
Introducing the Great Garlic, your ultimate kitchen companion. Just place a peeled clove of garlic under the grate, rock it back and forth, and say goodbye to tedious chopping and messy mincing. Scan now and find out for yourself just Great Garlic is.
Say hello to the Cobb Gobbler, the effortless corn stripper. That's cream of the crop. With its ergonomic design, peeling corn has never been easier. Crafted from solid, rust-proof stainless steel, the Cobb Gobbler is built to last.
I love the Cobb Gobbler. Totally changed my salad game.
I used my Cobb Gobbler so much I bought 3 more. It shucks great.
Elevate any dish with freshly shucked corn. It's quick, simple to use, and easy to clean. Code for an exclusive discount.
If you've ever tried to clean a garlic press, you are going to love this. Introducing the Great Garlic. No chunks, no squeeze, no stuck pieces. It's faster, cleaner. If you cook even a little bit, you're gonna need one of these. Scan the code on your screen now.
Introducing the Great Garlic, your ultimate kitchen companion. Just place a peeled clove of garlic under the grate, rock it back and forth, and say goodbye to tedious chopping and messy mincing. Scan now and find out for yourself just Great Garlic is. We all love recipes with garlic, but trying to use an awkward garlic press makes a smelly mess. Introducing the Great Garlic, your ultimate kitchen companion for effortlessly crushing garlic to perfection. Just place a peeled clove of garlic under the grate, rock it back and forth, and say goodbye to tedious chopping and messy mincing. The Great Garlic ensures consistent results every time. Scan the code on your screen to order your Great Garlic today. This is a limited time offer, so scan now and find out how great the Great Garlic is.
Say hello to the Cobb Gobbler, the effortless corn stripper. That's cream of the crop. With its ergonomic design, peeling corn has never been easier. Crafted from solid, rust-proof stainless steel, the Cobb Gobbler is built to last.
I love the Cobb Gobbler. Totally changed my salad game.
I used my Cobb Gobbler so much I bought 3 more. It shucks great.
Elevate any dish with freshly shucked corn. It's quick, simple to use, and easy to clean. Code for an exclusive discount.
Welcome to Goodbye or Goodbye. Our goal here to help cut through that noise to navigate the best moves to your portfolio. I'm here today with Ben Connor, Carnegie Investment Counsel Portfolio Manager. Ben, it is great to see you. So we're going to start on a name you like, Ben, and that would be Microsoft, which has had a good run already, Ben. It's up about 25% year to date. Most analysts on the street, they still like this one. You do too. So let's walk through some of the reasons why. The first reason, Microsoft 365 commercial revenue.
Sure. Microsoft has a huge base. They've got about 400 million commercial users. That provides a steady source of revenue for the company. It's pretty economically resistant. It's not going to move much. And it provides a steady cash flow for them that they can invest other places in their business.
Second point, Ben. Second reason you say this one's set up to monetize AI.
Yeah, it's actually related to the first point. With all those users, they can add their co-pilot to their AI agent, and they can upsell those commercial users the co-pilot. They charge more for it. They almost double the revenue per user, and so that's a big source. And then they have Copilot in GitHub, which is their software development program, and that's grown quite nicely. They're about 20 million GitHub users using the GitHub Copilot, and so it's a nice added revenue. And they're one of the few companies that are already monetizing AI.
And a third reason you commit capital to Microsoft, Azure cloud growth.
Yeah, Azure is their cloud infrastructure product. It's growing nicely. I think it grew 39% year over year last quarter. They are obviously providing the infrastructure the data centers need to run AI. They obviously have a relationship with OpenAI, and that's leading to steady growth. And then just in general, we still have tech companies moving their technology from on-premise to the cloud. And since Microsoft has an established relationship with a lot of companies through their legacy server business, that provides an easy guide. Be like, using us now, let's transition to the cloud.
All right, finally, Ben, before you all pile in, let's talk about some downside risks. Cloud business has lower margins. Walk us through that.
Yeah, in general, the cloud business has lower gross margins than their other businesses. And it's also their fastest growing business. So if you just think about that, that's going to lower their overall margins. And then the cloud business is very competitive, and it's becoming increasingly competitive with Oracle. So you already have Amazon Web Services, you have Google Cloud, and now Oracle Cloud has joined.